The Land Bank says it will pilot an insurance product aimed at protecting smallholder producers to provide affordable drought risk insurance for both crop and livestock farmers. We're now joined by Pascal Siphugu, the Land Bank Insurance Company Managing Director. Now, Pascal, Land Bank known for backing farmers in terms of starting their businesses and getting the particular seeds they need for crop and farming. Why have you now decided to go with an insurance wing?
So thanks for that question. Our mandate is to drive up an inclusive agricultural sector. And our studies have shown that the smallholder does not always take up insurance, which leads to all forms of devastation in the event of any of the perils happening, particularly in the face of climate change. And we all know that with climate change, the weather patterns have become extremely volatile. So as part of exercising our mandate, we're bringing products to market which are suitable for the smallholder on the crop side and the smallholder who might have 2 or 3 cattle.
When you say the smallholder farmer, what kind of farmer are we talking about? How much land should they be having? How big should their business be?
Well, it really doesn't matter the size. What we are saying is the current products in the market pretty much caters for the commercial farmer. Perhaps somebody who's got X number of hectares of land, let's say 100 hectares of land, let's say a head of cattle, 20, 50, 100. Through these product solutions, we are saying that even the smallholder who's got 2 cattle can come forward and buy insurance cover for their livestock. Even a guy who's farming on a 5-hectare plot can come and buy cover against drought.
When we say risk insurance for farming, what exactly are we talking about? I mean, if a particular person would say they're insuring their businesses, they'd be talking about assets being trucks and buildings and such. But for farmers, what does that entail? Is it the seed, the trucking equipment? What exactly are they insuring?
So let me break it down into the 2 different product solutions. We are launching what we call the area yield insurance product. It's an index-based product based on your average yield, say, over the last 10 years. Now, anything below that, anything below your average for a particular area will then trigger a claim for all of the farmers in that area. So if the average yield in an area in Limpopo has been X amount of tonnage, if it falls below, that will then trigger a claim. On the livestock side, we'll look at the health of the pasture, the grassland, and obviously looking back to look at what has been the health of the grassland, the pasture over time, because the grassland will impact the feed and the forage, which in turn will affect the livelihood of the livestock. So those are the indices that we will measure. On the crop side, we look at the production over time, and on the livestock, we'll look at the state and health of the grassland.
And how would you be working out these particular premiums? I'm sure there are smallholder farmers who would be interested in this particular product, but also interested in how much they would have to fork out to make sure their business is protected.
Sure. So we pricing and we bringing this to market to make sure that farmers, smallholders can afford them. So as a principle, the products are supposed to be affordable, more affordable than your traditional insurance products out there. But let me also add that these products are quite common all over the world. And there are about 14 case studies in the continent, in Africa, of such similar products where their governments believe in the smallholder economy and they support farmers through subsidized premiums. We're not there yet, but that is the journey we're working towards. So we're engaging with all stakeholders in the insurance market, working with the government, working with commodity groups to mobilize support for insurance subsidies so that everyone can afford this. Just to give you an example, in Kenya, for instance, the government will provide subsidies of up to 80%. So the farmer only really needs to contribute the 20%. So can that be done? Yes, absolutely. And this is what our engagements with government are about at this stage, to provide government subsidies so that each smallholder can take up cover. In my example in Kenya, they, to date, over the last 7 years, have grown the number of policyholders to 1.3 million policyholders. I understand in our country we have just under 1 million, and insurance penetration into our smallholder segment is below 1%, which means in the event of devastation, the smallholder has got no way of bouncing back.
When we look at that devastation, I mean, more recently, we now live in a world where we're going through severe weather patterns. We saw the black frost in Limpopo and how that affected the potato farmers, a lot of flooding that has happened on South Africa's coast. What are you looking to ensure here? Because a lot of commercial insurers are trying to move away from the greater acts of God because that's punished them on the bottom line.
No, 100%. Yeah, that is what is required, isn't it, to support the sector, to support a growing, inclusive agricultural sector. What you need is products that provide farmers with climate resilience, be it drought, be it excessive rainfall, that the farmer has got sufficient compensation to go into plant next season. That is exactly what this should be about.
And the process to sign up for such an insurance, would it be rigorous? Because a lot of business owners will say these products are out there, but as soon as you walk into the doors, you realize just how much red tape is there. Are you going to be asking for a lot from the farmers?
No.
Unfortunately, you seem to have lost Pascal Siphugu, the Land Bank Insurance Company Managing Director, saying they're going to be piloting a risk insurance product for smallholder farmers.